Today's episode is sponsored by Innovator. On January 2nd, Innovator ETFs launched something brand new, the industry's first quarterly dual directional ETFs, ticker symbols DDSQ and DDNQ. These funds expand Innovator's dual directional ETF lineup by offering shorter, tactical 3-month outcome periods designed for today's fast-moving markets. What makes them different is how they're built. Each quarter, these ETFs reset and are designed to pursue positive returns whether the market goes up or down.
Investors get 1-to-1 upside exposure up to a cap and 1-to-1 inverse exposure on the downside up to 5%, meaning if the market falls 5%, the fund would be up 5%. It's a structured product style payoff delivered in a liquid, transparent, daily priced ETF wrapper. And with DDNQ, this dual directional profile is now available on the NASDAQ 100 for the first time. To learn more, visit innovatoretfs.com. Welcome to Animal Spirits with Michael and Ben. Michael, fool me once. What's the saying?
Can't get fooled again.
Two things that aren't going to happen. Throw this in my face if I'm wrong. Credit card rates are not getting capped at 10%. This Jerome Powell indictment is not going any further. Thoughts? This is my knee-jerk reaction.
On the first matter, correct. The Trump truth, like... Any company that by January 20th is in violation of the law, I mean, it's pretty unbelievable what's happening right now. And sorry if you're a Trump voter and you're going to take offense to what we're about to say. I'm not mad at you, right? Everybody is entitled to their own political opinions. We don't talk politics on the show, but we literally cannot not talk about this because this is impacting the economy. This is impacting the market. This is our lane, okay? So. Again, I'm not mad at anybody for who they vote for.
I will give him credit for trying to bring costs down. The way he's going about it is probably not the best way. How's that?
Well, you have said, and I have agreed, that the interest rates that credit card companies charge are onerous. Now, we all understand that a lot of the benefits, a lot of the rewards, all of that stuff, unfortunately, is what it is. It's subsidized by the people that make late payments, that are paying the interest. That's where all of the money is coming from.
There's some of the way that credit cards work doesn't feel like it's fair because it is people who carry revolving balance and pay these onerous rates, 20 to 30%, are effectively subsidizing people who get rewards points and pay off their credit card every month.
One of the points that we made or that you made over time is like, why do credit card rates just continually go up all the time? Why do they have to go up? And especially you could say in a backdrop where like, we see record earnings, the consumer is generally okay. Like, why does it need to be so punitive? And I agree. Let's just say that the intentions, the spirit of what is trying to happen is good. Credit card interest rates should probably not be 29% or wherever they are. Okay. And also, a hard cap at 10%, if implemented, would crash the economy in 2 weeks. Part of the reason why we can't cap them at 10% is because that would dry up the amount of credit. The banks would just say, no, we're just 10%. Now, maybe 29% is egregious, but at 10%, the math doesn't work. We can't. The default's like we're not going to be underwater to loan money. No way. So it would tank the economy in 2 weeks. That will not happen. Will not happen. It's not going to happen. We're not
because the credit would be pulled back. Unfortunately, these are loans that are like non-recourse loans that aren't backed by anything. Right there's and you can get them really quick. So if we did try to fix this industry, the credit standards would be higher. People who use the credit the most and carry the revolving balances probably wouldn't get it. And people would say, hey, that's probably a good thing. They're not paying high rates anymore. Unfortunately, what that would do is push them out to payday lenders. It would push them out to buy now, pay later more. They would find the financing somewhere else, and it probably would be a worse situation, unfortunately.
It's not good. On the Powell front, this is, again, this is not an attack on Trump voters, okay? But what is happening with this is insane. You cannot indict the Federal Reserve, the chair, whatever is happening based on nonsense. I think it's about some of the reports about the building of a new building or whatever. Trump was asked yesterday about this, and he said he didn't even know about it, which is
honestly, it does. The stories sound like it was kind of Pulte and what's the Fox News woman who's now in charge of something important. It sounds like they kind of went rogue on this. And so maybe this is one of the times where he does have deniability. But the point is, you don't do this. Unless there's really a smoking gun. And Powell is probably one of the most upstanding citizens we have in government these days. And I don't think a lot of people even realize he is actually a Republican.
Yeah.
Trump appointed
Trump
him.
appointed him.
So going after him, and he's one of the most buttoned up people. It would shock me if there's anything wrong in his administration. He's probably one of the last adults in the room in most government official capacity right now. So it's a bad look, and I also think he's probably the last actual independent Fed chair that we will have in our lifetime.
I don't know about that. I don't
Come
know.
on, this is now going to be a weaponized tool.
Well, but a lot of people are pushing back on this, and I think hopefully this galvanizes both parties to just say we don't do this. Like, we do not set interest rates based on the will of the president. That is not how the economy is supposed to function.
A lot of people are saying, hey, wait a minute, the stock market hit an all-time high yesterday. Obviously, the markets don't care about this. The thing is, this is a long-term thing. If this actually was something that, like, we're really going to tinker with the Federal Reserve in a big way, and some people will say, well, Nixon pushed back against his Fed chair in the past, but really Fed chairs have been, Reagan let Volcker take rates to 20%, which never would happen today, right? But the thing is, if this is a long-term thing, if we really mess with the Federal Reserve in a big way like that, at a certain point, people start saying, all right, we need a premium on your U.S. government bonds. Yields are going to be higher going forward.
I think that the move in gold, both in the longer term, like what's been happening, but especially the reaction on Monday, is you could draw a direct line to a lack of faith in what is happening. And also, wouldn't you expect the dollar to be weakening if that were true?
Are you also surprised that Bitcoin is not getting more of a bit here with this?
Yeah, I am.
I thought Bitcoin was the anti-system play, but gold and silver have seemingly supplanted it in the last 18, 24 months. It's very surprising to me.
I am surprised. And yeah, if you're unable to see past your political affiliation that this is not great, like, come on. And I think, as somebody who is not a big fan of the president's policies, I also do think that I am able to see past this. So the Trump baby accounts, or whatever we're calling them, I think is an incredible thing. It's one of the best pieces of legislation that has been passed, at least in my recent memory. But you got to call balls and strikes. And this is worse than a ball. This is thrown over the umpire's head. We don't do this here.
Two guys who are not political at all and hate talking politics. We'd rather not have, we're talking only purely the financial angle here. We care about the markets. I've always said my political party is the stock market. That's the political party that I'm a member of.
Yeah.
Not a Democrat, Republican, or independent.
I vote for the NASDAQ 100 every election. Here's another one in politics. RFK Jr. said, and these are quotes, your kids are never going to buy. Oh, by the way, before we go onto the RFK thing, just this was hilarious in Bill Ackman. I don't know, what does Bill Ackman do? What is the point of you money? Isn't it to not be able to do this? So Bill Ackman tweeted capping credit card interest rates was a mistake. And then he deleted that post and then put up another post saying it's a worthy goal. I mean, come on, dude. Are you effing kidding me?
Haven't we learned in the 2020s
grow a pair
that FU money doesn't really exist for the richest people on the planet because they have so many stakeholders?
I suppose it doesn't.
CEOs don't have FU money. If you're a CEO that makes $100 million a year, you don't have FU money because you have shareholders and stakeholders and people that you have to appease.
All right. RFK Jr. was on a podcast and he said, your kids are never going to buy a home. There's 3 big companies, BlackRock, State Street, Vanguard. They basically just own everything. And now they've decided is they want to own every single family home in our country. I guess it's one thing when conspiracy nut jobs on the internet say this, but when somebody who is as prominent as he owned, it was with Theo Vaughn. What are you doing, dude? This populist nonsense is destroying our country. And there are legitimate reasons to be annoyed. There are things that both parties do that piss everybody off. Not everything is perfect, but deliberately lying and making it worse. So I think we have a very smart audience. I think everybody in our audience understands that Vanguard doesn't own any single family homes, okay? Vanguard, BlackRock, and State Street, would they own everything? That's us. It's the investing class. It's the index funds. What what is this? And the comments, of course, people are like, yeah, like let's get them. This is so dangerous.
Anger works, I guess. I think that's what we've learned. So obviously the other big thing was Trump decided that we're going to ban institutions from buying homes, right? And I think a lot of people like this because it seems like, yeah, this is a problem. These big private equity firms are buying homes. If you look at the numbers, Rick Palacios from John Burns shows the market share of home purchases by institutional landlords. That's people who own 100 plus properties, and it's 1% per year essentially, or per quarter. So 1% of all home purchases in the U.S. are done by institutions who own 100 units or more. I think it's like 3% of the total homes. He said.
Yeah, but there's a huge asterisk here, and I would say that, like, maybe let's just give the president the benefit of the doubt and say there are good intentions behind maybe capping interest rates on credit cards. Obviously, not maybe well thought out, like not thought through the ramifications of, well, actually what would happen. You could say, fine, like good intentions here. Do the private equity companies, do these giant pools of capital need to be buying large blocks of houses? Probably not. I think this started after the GFC where they were scooping up houses on the cheap, which obviously was great for them and their investors. Probably not so great for people that were trying
Well,
to
it was
buy
actually
houses.
the crazy thing is that they were the buyer of last resort then though. No one else could buy a house back then. So actually the private equity
Yeah,
companies stepping in.
But weren't stepping into what? Homes that were in default?
Well, they were buying and then they were renting them out. So I think I'm not trying to defend private equity here. Don't put my name on that. But I think at that time it was.
Okay, so anyway, my point is this. No, that was not good intention, dude. They were vultures. They were sharks. And I'm not mad. That's capitalism. That's the way it works. But this number of they own 1% or 3% or whatever it is, I understand nationally it's a small number. But let's be real. Housing is local. And there are communities.
Yeah, Charlotte and Phoenix and some of these cities where it's a bigger amount.
Yeah, Blackstone's not in my neighborhood, right? But like there are a lot of communities in which it does feel like institutional landlords own everything. Prices are out of control, not their fault. But yeah, fuck them. Like that's the prevailing attitude. And like that part of it, I do understand.
Yeah, but so obviously this isn't going to make housing cheaper because it's such a small number. People say, hey, do anything you can for demand. But I think, when are we going to get a politician who just says, listen, the thing is we need to build more. We can do all these other things, but the thing is it's going to have to be like a Gen Z or millennial candidate because
the problem is that's just deeply unpopular. Like, yeah, build more, but not in my neighborhood.
I know but if you really want to fix, I mean, the funny thing is if you just put, I don't know, 3 million homes on the Northeast and 3 million homes on the West Coast, and we figured out a way to do that, that would probably alleviate much of the housing issues that we have. Right?
Yeah, I'm making this up. I'm out of my depth here. I feel like there's like, at least, well, I live on Long Island. There's no room to build houses. We're full.
Yeah, you're right. Where do you so
like I don't know the geography, topography of where there is available land to build, but let's do it.
So I think the day Trump got elected, I slacked you and Josh and I said, or maybe our research channel on Slack, and I said, Trump is going to buy mortgage-backed securities and he's going to bring the spreads down. I've been pounding the table on this. And now he says he can do it. I guess with Fannie and Freddie, he can buy like $200 billion, which seems like kind of a drop in the bucket, but I guess the spreads are already tightening. And Logan Mohtashami showed that, that since 2024, 2025, 2026, the spreads are already lower. And so that's the spread between the 30-year and the 10-year, which the 30-year tracks the 10-year basically because a 30-year mortgage, the average length of time someone keeps that mortgage is around 10 years.
Okay, so is this I think this is a policy that we can both get behind.
I've been saying we should do this for a while. I totally agree with this one. It makes a lot of sense to me. It's interesting that the rates are so low. It's funny though because a lot of people said, well, if we ban this home ownership stuff, won't this be bad for home builder stocks? And our research team, Sean and Matt, one of those guys put the chart together. Home builders had their best 2-day stretch since 2022.
Wait, so, why would anybody think this would be bad for home builder stocks?
Well, because they build a lot of the homes that the private equity companies are buying. Someone has to build them. If private equity companies and institutional investors pull back, guess what? That's less demand for new homes to be built because they're doing a lot of build up, right? So the thinking is actually this could be, if we did this institutional ban, this could be worse for supply of homes because maybe the people who are stepping in to
Oh,
buy, but it's actually good for home
maybe.
builders. So this is the next step. So we're going to buy the mortgage-backed securities. The next step, because this is what I would do. The next step is going to be we're going to incentivize home builders to build more homes somehow. That's the next step. That's what they're
I
going
think the
to.
problem is at the state and local level, there's all sorts of red tape, and I just don't think you could snap your fingers.
So that's what I would. That if you gave me a magic wand and said fix the housing market, that's what I would do. We're going to incentivize and we're going to cut the red tape. And if anyone gives you, that's what you have to do. But you're right; it's so local. How do you do that?
Yeah, to me that this is a national emergency, and if they're able to pull something like that off, that would obviously be an enormously good positive thing.
All right, can we talk about the job market?
Sure.
All right. But the funny thing is, that was a lot of stuff. That was like a week's worth of stuff between the institutional ban, the mortgage-backed securities, the credit cards, and Powell. That's 4 things right in our lane that happened all within on a week.
And Venezuela.
Yeah,
I mean
for oil prices,
the
I
oil
guess.
stuff. Actually, you know what? Hold on. I have a great chart for the labor market. A chart could cook me up something, and I forgot to put in the doc. All right, look how good this is.
But this is why the takes game is not an old man's game, right?
No, you got to be on top of this shit. At some point, yeah, and it's not a bald man's game either. I got to be honest. Okay. Check out this chart. So we have a weird labor market where the unemployment rate is still pretty low,
Mm-hmm.
but there's not a lot of new jobs being created. Right?
Okay.
So, Matt, put in buckets of unemployment every 0.5%. Below 4 all the way on the left hand, and 9.5 to 10 all the way on the right, and everything in between, 0.5%, right? And then he showed the average number of jobs added over a 7-month period per bucket. And I asked him why 7 months, and he said that's because that's when the labor market started to weaken recently. So we're using a 7th month look back.
Okay.
And on average, we add 1.247 million jobs when the unemployment rate is between 4 and 4.5% over a 7-month period. 1.247 million. Over the last 7 months, we've added only 74,000 jobs. You see what he did here?
Yes, this makes sense. Okay, because we're obviously going in the wrong direction. So we look at the next one. I look at the unemployment rate going back to late 1940s, and you can see every time in history that the unemployment rate has started to rise a substantial amount. And I could say that we're getting close to being substantial now. It's led to a recession. So the big question is this another one of those times that we break the rule? Because the other rule was, listen, anytime inflation goes over 5%, the only way it's been remedied is by a recession. That's it. Inflation doesn't go this high without being remedied by a recession. This time was different. Could we actually see the unemployment rate rise from 4 to 5% and not get it? I think we were sub 4 and not see a recession. Is that possible?
A nationwide recession, yes, it is possible.
It seem like this is the cycle for whatever reason that could break the spell? I'm not predicting this, but would it shock you if that happened this time around? Absolutely not.
It's going to continue to degrade the social fabric. Like, it's going to continue with more pointing fingers, more blaming boogeymen. And I understand that comment makes it like people that are struggling don't have a legitimate gripe. They do. Okay, they do. And also just the blame game, blame immigrants, blame corporations, blame the government, blame this person, blame that person. Like,
well, AI will get a lot of blame too.
Blame AI, sure.
I thought this was so this is Tim Dye, who's at SGH Macro via Samro. And Samro had this piece called the 10-year dividend labor. So he said, people are wondering, why does productivity keep getting better and improving if the labor market is so weak, right? And he said, a key feature of this phase is a 10-year dividend. This is from Dye. With hiring and quit rates near post-GFC lows, firms face minimal training and onboarding costs. Business survey responses to the Federal Reserve Bank of Atlanta indicate it takes roughly 6 months for new hires to reach full productivity, but a meaningful tail of roughly 15 to 20% of firms report ramp-up periods of 12 to 18 months. So that means it takes a long time to hire or train new people. The current workforce is therefore skewed toward fully onboarded, experienced employees, mechanically boosting output per hour worked. So they're not hiring new people at most places. So the people who are still there have more experience. That boosts
Oh,
productivity
so
because you're not.
it's like selection bias. I don't know if
Yeah,
that's the right phrase, but
obviously that can't work
it's
forever.
not being dragged down by newer, less productive employees.
So the
So maybe
question is,
it's like an illusion that the average worker is getting more productive.
kind of, but I think it's just that a ton of new employees slows things down for everyone because you have to train someone new, right?
That too.
The question is, can AI do this? And this is your point of where people get really mad and we get pitchforks and torches. Can AI do this where we have unemployment is going from 4 to 6%, but AI productivity helps and corporations don't skip a beat? But we
Yeah.
have this. That's the
Well, yeah,
question.
this is the nightmare scenario. Nightmare might be a stretch, but this is the not great outcome. I was last night during the game. I was on my couch and I decided to fire up Claude Code. This has been getting this has like been all the rage, particularly this weekend. It seemed to hit like a fever pitch. Have you seen people talking about this?
A lot of people talk about this.
Okay.
I'm on the sidelines still.
Yeah, of course you are. And ordinarily I would be on the sidelines too. I don't know what compelled me to fire this up and say, you know what, let's play around. But I feel like with this, it's like important to. I mean, for me, it just I want to stay on top of what's happening. So I tried to install Claude Code. Got to be honest, not an old man's game. I had no idea what to do. I
Hey,
couldn't even figure out. Dude, I couldn't even figure out how to download it.
I did some coding on my website recently. I said I want to make it big. I want to make it bigger. I want to make it stand out more. Where it says to sign up for my email newsletter on my website. And I
Okay.
said, I think I did it through Chat or Gemini. I can't remember. I said, help me do this. And then I said, no, make the line more bold and make this stand out more. And it tells put this code in. I say, where do I put the code in? I have no idea. And it walked me through every step. If you
Yeah.
just say, I don't know, where does this go? It walks you through. And then guess what? I did it and it looks nice. It came
So
out exactly how I wanted to.
there was a lot of me saying to Claude, I don't know what's happening here. Like it's not working. Help me fix it. You hit Command Space. There's a terminal on your Apple. I have no idea what's happening.
I think instead of me
I
doing Claude coding, I'll have an AI agent that does it for me.
well, the AI agent is Claude Code, I believe, or something like that. So anyway, I had it build an app, a website, if you will, to locate the nearest toilet. That was the first thing that I can come up with, and
So,
it worked. It did it. It took about 6 minutes.
so when you're in college, everyone has a friend or group of friends who has an idea for a business. Like,
Yeah,
hey
not
man,
me.
we're
Not an
gonna sell
ideas guy with
T-shirts. We're
businesses.
gonna start a bar. We're gonna do
Yeah,
like I had a friend who we're gonna start a copy printing thing, and the ideas are always really dumb. But so when this people have the ability to try to build their own apps, everyone's gonna be like, oh my gosh, I'm gonna build the next great app, and they're all gonna be horrible ideas.
well, that's what's happening right now, I believe. Like
Yeah.
so. Uh, anyway,
All right.
we got
Let's talk about the
distracted.
stock market. All right. Here's a kind of
Oh
headline that
wait. Sorry, before we move on to the stock market, one last thing. So Apollo did their chart book on the housing situation, and
yeah, it was good.
um,
I pulled some charts for later, but what do you got?
this one in particular, this stood out. Freddie Mac's serious delinquency rates for multifamily is the highest it's ever been, and this is data that doesn't lie. So we could hem and haw about vibes and things aren't that bad, and I've certainly been guilty of this. This is bad.
So why are delinquency rates so much higher for multifamily units?
Well,
Because
because
it
these are lower income people.
okay. Yeah, I got nothing. It's higher than it was in
No, it
2010,
just
2009,
is.
right?
It's this. This is a stark and sad and depressing state of the reality for these people.
So the counterpoint
It's
would be this is 45 basis points of the total. It's a tiny, tiny, tiny
That's
number.
not a counterpoint.
Why is that not a counterpoint?
Well, because the micro element is the reality of life for these people is horrendous. Now, if you zoom out, I think your point is that on a macro level,
Yeah, that's I'm looking at it from an
yeah.
analysis. You're right. Uh,
One last thing. GDP growth has been actually not too bad, but this would be a major unlock. So if we start buying mortgage bonds and spreads compress and housing activity picks up, residential investment as a share of real GDP is close to an all-time low. It's at three. It's just over 3%. So if this gets going, could be good for the overall economy.
well, that's
I mean,
part of it.
it's
We
kind of
had a
amazing that we've been in a decent economic situation, all things considered, um, without one of the largest portions of the economy contributing anything really.
Right. We had a mini boom in apartment building when rates got really low. Then rates went high and they pulled back on building. And so yeah, you think lower rates should hopefully help that. All right, here's the kind of headline that gets dunked on in the future, potentially. So depending on where things go. Every Wall Street analyst now predicts a stock rally in 2026. This is from Bloomberg. So it says not a single one of the 21 prognosticators served by Bloomberg News is predicting a decline, and the average gain next year is 9%. Can you blame them? That's my only question. Can you blame them for predicting this? I'm
No,
surprised there's not like one person that's like sticking their neck out a little bit, but
yeah, but also so I hear what you're saying, but let's just assume that there were one of the 21 strategists who did have a negative outlook, right? Who just was going to say, you know what, I'm just shoot my shot. I'll be a contrarian. I'll be the one. Does that change the takeaway? You know what I mean? I know the headline is like LOL, every Wall Street analyst, but if it was every Wall Street analyst but one,
well, didn't a lot of the bearish people kind of get pushed? Like there was a couple bearish people, and they kind of just you're done for a while. Go
yeah.
sit over
I
there.
guess my point is like just focusing on the headline. Like, yeah, fine. I mean, but it's always like this. Sometimes there's one or two, or maybe three. They're always bullish.
Right. But history shows they probably should be. That's what I'm saying.
Right.
You can't really blame them. How about this one? Wall Street's risk-on fever shows no signs of abating in New Year. So
Well, how about this? Let me just be clear. If this turns out to be a very bad year, we can cut this clip and say that I did not see it coming. I am not taking this as a watch out indicator. They're always bullish. So what?
Hey, I said the chances of a bear market are decently high last week in the show, didn't I? I still kind of believe
You know
that.
what's great about this show? We say different things every week. I forget what I said. What did I say 20 minutes ago? I have no idea.
That's
That
true.
wasn't me.
No one holds us accountable. All right. So Bloomberg says there's a synchronized cross asset rally in 2026 from meme stocks to high yield bonds to small cap company shares, showing no signs of slowing down. So look at this. The Roundhill meme stock ETF is going nuts now again. High yield is doing decently well. I got to take some umbrage with the access for the high yield
Yeah,
here.
this is. Yeah,
They show
come on.
80 twice and
I-
81 three times. So but the Russell 2000 is finally joining the party a little bit. That's taken off in the last few months. So it's just showing that the risk appetite is hitting other areas. And again, I think some people would look at this and go, oh no. I think you look at this and you go, the bull market is broadening out. Like if we're looking at it from a technician perspective, which I'm not, I think you'd have to say the fact that things are broadening out, this is a good sign, right?
It's a great sign. Come on. If you've been in the market long enough, you know that of course there's no guarantees. Nobody knows what's going to happen. But a broadening of the rally, a relentless uptrend with more and more stocks participating, if that worries you, you will never make money in the stock market. I'm telling you right now.
Right.
If your knee-jerk reaction is to be bearish when things are going well, that's a personality type. And sometimes getting cute works. But generally speaking, over the course of your career and your life as an investor, to be a knee-jerk contrarian when things look really good, that's not how you make money.
Yeah, you can't say I'm worried because nothing else is going up except for 7 stocks, and also worried when everything else is going up now too. You can't have both.
Yeah, I get the former. If you're worried because it's a really thin market, like, okay, yeah, that's legit. I get it, right? Like it didn't work, but I could understand that mentality. If you think like this is as good as it gets because things are now working, like because the Russell 2000 is finally breaking out after 4 years of going sideways, this is super bullish. It just is. Deal with it.
Yeah.
We've spent a decent amount of time talking about or wondering like what is going to happen with international flows, like when are investors going to get excited. Todd just sent me his deck this morning, and one of Todd Sohn at Strategas, one of the charts that he shared was emerging markets, another area that has been just dead money, doesn't even begin to do it justice.
I think like a lost 10 or 12 years almost. I
Honestly think
way.
it's close to 20 of sideways nothingness with lots of chop, lots of bear markets, just disgusting behavior. And he shows the rolling 12-month sum, and like it's picked up in a serious way. People are getting involved. China's breaking out. Like things are looking better for sure.
You'd be surprised. I looked this the other day. I'm doing my asset quilt. Because last year was up 35% or something. So in the last 10 years, what is the 10-year return for EEM, which is the iShares Emerging Market Value or Emerging Market Index? You're never gonna get this.
Oh, really? Is it higher?
Annual return.
Because I would have guessed annualized is like 4.5%.
Almost 9.5% in EM.
Wow.
Yeah, 35% last year. That helped. It's
Okay.
so that's higher than you would assume, right? So some of those bad years, the thing is,
Yeah.
So here's the thing. If you look at the 10 years as of 2025 or 2024, the annual return is like 3% per year. One of the
Okay.
bad years dropped off, a good year comes on, now we're at 9%. So that it's kind of a game thing,
I'm
but
looking at a monthly candlestick chart. And yeah, dude, this thing peaked in October 2007, and then it peaked at the same price in 2021. And we're basically like just now getting above those levels from
but guess what happens
2007.
But guess what happens when investors see high 1, 3, 5-year returns? They
They
go,
start to get
oh,
involved. Yeah.
oh, and then that's
Yeah.
why money pours in. And so
Yeah.
people are paying attention a little bit. All right, let's talk inflation real quick, which came out this morning. We're recording Tuesday. What is it? Market just opened. What happened to your bell? You don't have a bell anymore. You used to have a bell.
That was think or swim. Yeah, I'm a Y charts guy now.
Okay. You used to always have a bell that would ring at open and close. You should just pay someone to come do that for you now. Just come and ring a bell in your office and then walk out. So the inflation rate came in at 2.7% for all of 2025. That was the average annual inflation rate for 2025. All right.
If you believe the numbers.
Yeah. And guess what? People on Twitter, they don't believe the numbers. Anytime I post about inflation, comments aren't great. Anyway, I put the 10-year chart here. And if you look at the over 100 plus years, Y Charts has the inflation data going back to like the 1910s, call it. It's 100 plus years. The average, I said that like that was a weird.
Average?
Chicago. That was Chicago. The average annual inflation rate in that time is 3.3%. That's like long-term US average is right around there, 3.5%, something like that. We've been below that long-term average for how many months now? I'm giving you a lot of quizzes today.
6.
18 months going on now that we've been below the long-term average. Now, if you look at a chart, a long-term
I
chart.
mean, sorry, I'm not trying to be a jerk, but that is completely erroneous. I mean, after the worst inflation in 50 years, the fact that we're below average, I mean, falls on deaf ears. Don't come to me with that. No offense.
So I have a new theory on why, because if you look at the historical chart of 100 years of inflation, this current period, I know we didn't have it for a long time. If you look back like 1970 and before, all the inflation increases, you'd look at this now and go, that's so tame. What is wrong with you people? Why are you so up in arms and mad? This is nothing. This peak of inflation.
You're kidding, right?
No, I'm just saying, if you looked at the historical record of all the inflation spikes before this, you'd look at this period and go, that's a drop in the bucket. What's wrong with you people? So
No.
listen to this. Listen to this new theory I have.
I think what you just said is absurd.
If you look at the long-term chart, you wouldn't pick this one out of there's 10 peaks that are higher.
We're an alien to look at a chart and not understand human beings. Would they make that conclusion? Perhaps.
Yes, that's what I'm saying. Here's one of the reasons why. Here's one of the reasons, and this is such a simple thing. I was just thinking about this the other day. Think about how hard it was to spend money in the past. It was impossible. You had the bank held your money for you. You had it under your mattress, and it was cash. It's so much easier to spend money now. It's harder for people to slow their spending because you can click a button.
There's no friction.
It's so easy. I was thinking about this. I buy way too many clothes and stuff because it's so easy. I get an email from someone, hey, Ben, come on, 30% off. Wait, you left this in your cart. Leave it 30% off. Come on, come back.
It's true.
It's so easy to spend.
All the Knicks gear that I have, like this here snazzy hoodie, guess what? I would go to Modell's twice a year, maybe. Like now I'm shopping 24/7. I can't stop.
Exactly. It's so much easier everywhere you look to shop just with the click of a button. Amazon. I don't need this, but I want it. Or it's so much easier to spend. And so I think slowing your spending has been so much harder this time.
You know what I bought on Instagram recently? I saw a video of like, what would happen if you drowned in a car and like why you can't open your window or get out? And it was an advertisement for like this little thing where like you could like cut your seatbelt and like bash the window. And I bought 2 of them because obviously you can't just buy one. It's like a 2-pack. Mm-hmm. And Robin's like, what is this? And I said, if we ever fall into a lake, and then I realized I'm like,
if you're ever part of a Harrison Ford movie, you can get out of
the car. There's no lakes around here. What am I doing?
You drove off a bridge? What are you talking about? You're right by the ocean. You got bridges that go over the ocean. This could happen to you.
True. If the GW collapses while I'm on it, and we happen to stick the landing, we could
Listen,
we'll be fine.
you're looking down at your phone, you don't realize, and you drive right off one of those bridges that we go under on your jet ski. Like, this could save your life.
Actually, you know what? I stand corrected. Great purchase.
Yeah, I'm on board. But then you land in the water, and then you go, oh no, where did I put it? Is it in the glove box? Is it in the middle?
Shit, it's at home.
Yeah, I can't find it.
You know what? This brings up another. So I've got many character flaws. Way more time than we have available for this show to discuss. But one of them is like I'll just have little nuisances, not even pile up, but just repeat forever. Like for example, I have Substack on my phone. I think I installed Substack, the app on my phone, and so every time I get a new follower or new this or new whatever, like my notifications are turned on. That's what I'm trying to say. My notifications are turned on for Substack. And for about 6 weeks, I would get 11 a day and I would just like, oh, look at my phone. Oh, that's a notification. And I would just like, clear it. And then I had this like, why do I have notifications on? Like I can turn them off, right? This is a choice that I'm making. So I turned my notifications off for Substack. And I also realized that like I've got notifications on for Amazon deliveries only because it's been on since the minute I downloaded the app. For 4 years, I've never turned it off.
Yeah, I hate notifications.
Anyway, I don't know what's wrong with me. I just let little things.
You know what I did? Mine built up too. All my emails, because every time I sign up for a new clothing thing or whatever, so my email every morning is just full of all these different retailers trying to pitch me.
Do you have, so in my personal Gmail, I have my main inbox, and I've got a promotions tab and an updates tab.
Well, I use Yahoo because I signed up for it when I was 18 years old. And I know.
My God, dude.
But I went through and I unsubscribed.
You use Yahoo?
I know. It was my very first email. I have a Gmail and a Yahoo. But I went through and unsubscribed to every single email that came into me for a week. And now my email is so clean. Like I just hit unsubscribe to everything.
Use Claude. That's what you use Claude Code for. You could do. But wait, hold on. What do you use your Yahoo email for on a personal level? Is that just like that your email account that's linked to like your flights, your this, your that?
Yeah, I've just literally had it forever. I never changed it. And do I want to use Yahoo still? No, but I did it when I was 18 years old, and I haven't been able to change it since because that was the one email address I signed up for. All right, AI.
All right, sign of the times. AI evaluation startup LM Arena valued at $1.7 billion in new funding round. $1.7 billion funding round is really sort of nothing with nothing, but that's not the good part. The good part is this. LM Arena, a startup that operates a widely cited ranking of AI models based on their performance, has raised $150 million. That's nearly triple the valuation of its seed funding round announced in May 2025.
Whoa.
Kind of nuts.
That's pretty quick.
And I know, I mean, obviously I know nothing about the product, and I'm not saying it's not a good idea or whatever. It's just, sign of the times. Speaking of sign of the times, I had Matt and Sean make me this chart of AI platform valuations for like the big three. So check this out. I'm dropping it in here right now. OpenAI, Anthropic, and XAI are now all valued over $200 billion. Look at these different. So the dots on the chart, Ben, are when they raised money.
And of course, rounds. Okay.
I mean, you can't see this if you're listening, but it's just up and to the right. Like kind of wild. Not kind of wild. Wild.
So when does this gap close a little bit?
Between what and what?
I think it's kind of over for OpenAI and Google. I think Google is like, in 18 months, we're going to go, wait, why do we think OpenAI was going to win? Like, you saw that Apple said Siri is going to use Gemini for their AI. Don't you think at this point, beyond the inertia of people just using chat, that like Google is clearly going to beat them?
I don't know. You might be right.
Am I jumping the gun here by saying it sure feels like that at this point, that it's inevitable that Google is going to be the winner.
Okay.
And I'm going to feel like an idiot at some point if it all falls apart, but that's what it feels like today.
Well, I think two things. I think you might be right. That sounds like a premature call. And also a $500 billion valuation for OpenAI, which was assumed, premised on many different assumptions. One of them being that they were going to be like the dominant player, and they are. That sounds like a crazy high valuation.
Yes, that's what I'm thinking. But I could be wrong, because chat just having the branding, that could be it, right? Yeah. It's kind of like Bitcoin being the first crypto, like that had the branding. All right. I want to talk gambling for a minute. So Matt Stoller had this tweet where he says, the second fastest growing sector in America in terms of GDP growth from 2019 to 2024 is gambling. So the BLS had this report that looked at different sectors and industries and looked at their GDP growth. So the highest GDP growth was for software publishers. That was like 9% per year. Gambling was 7.6%. Now, you could say, like, what was the base, right? It's coming off
it's
of,
a new category.
but a lot of people looked at this and said, this is horrible. This is bad.
It is.
It is in some ways, but don't. So I feel like we have to segment this because we did this early on with Robinhood, where we said, "Listen, is everyone on Robinhood a degenerate gambler who's just buying options?" And are a segment of them, yes, but are most other people using it relatively responsibly? Also, yes. And I think you have to do it with gamblers. Are there?
Nah,
So
I
no,
disagree.
listen. Don't you
Gambling,
think
because
that,
gambling is negative sum.
of course, but
Like,
don't you think one of the biggest reasons is not just financial nihilism and young people who are giving up on the world? Do you think a lot of it, if the GDP growth is that much for this segment, do you think most of it is disposable income from people who are using it as entertainment, who have
yes,
money? Like,
yes,
guess what? All of this money is not coming from 20-year-olds. They don't have a lot. They don't have any money. They're
yes.
betting $25 a game. The people who are betting the most are probably in their 30s and 40s and 50s who have disposable income. That's why
Okay.
this is such a growth arena.
Yes, and also, I would wager, get it, that the amount of people that are ruining their lives financially and their families' lives is 50 times greater than people that were day trading, YOLOing on Robinhood. 50 times, because it's just different with trading. You smell the roses, you take a few beats, whatever, but like, gambling is an addiction. You get hooked, you lose, you double down, you go
Well,
on,
also,
you
it goes to
spiral.
zero immediately if you lose. Like when you buy a stock, it doesn't go to zero the next day.
Correct.
Options can maybe, but
So I think that, yes, are a lot of the people that are gambling doing it so responsibly with money that they can afford to lose? Yeah, but I think a lot of people are getting really fucked up.
and
Like,
listen,
I think a lot of lives are genuinely being ruined, and I don't think it's like 2% of the people. I think
And
it's much
listen,
higher than that.
if I could, I would get rid of sports gambling immediately. I would if I could, like, I think it's going to ruin the leagues in a
I
lot
think
of
it's
ways.
I think it's horrible, especially for like uh for the people that it's too big of a price to pay. It's negative sum, and I love gambling. Like, right, I enjoy the shit out of it.
I don't think it's a good thing. I would, if I had my druthers, I would get rid of it immediately. I don't think it needs to exist.
It's not society does not benefit from having DraftKings and FanDuel on our TV sponsor commercials every 30 seconds. It doesn't. All right, let's talk about crypto. I feel like a weight has been lifted is too strong of a term, but I feel much better about my crypto exposure. I got lucky with sold into a little bounce. I sold a third of my Bitcoin at 93,000. I sold a third of my ETH at 3,250, and I'm good. I feel okay. This is a number that I'm comfortable with. I've now sold twice. Last time I sold was at the peak, not to brag. Got lucky. But I feel good. If Bitcoin crashes, it won't feel good, but I'll be fine. I'll buy more. If it moons for whatever reason, I'm good. I'm there. I feel better about my personal position.
It's a rebalance, right? You right size. That's the same thing I
Yeah.
did, and
I feel better.
yes, even if
I feel better.
Bitcoin doubled tomorrow, I wouldn't regret it.
No, I'd be thrilled. I still have a healthy position. I'd be thrilled if it doubled.
I still can't believe that it's below where I sold my first time. It's so surprising to me.
Okay. Did former mayor of New York City, Eric Adams, like literally do a rug pull? Like, what W2EF? I sent you and Josh an image of Ed Helms. Wait, is that yeah, from The Hangover, in the back of the cop car, he's screaming, "What is going on?" Remember that scene?
Yes.
So, all right, here we go. This is from Yahoo. The former mayor announced the token at Times Square press conference on Monday, saying the project would address anti-Semitism and anti-Americanism using revenue generated by the token, while also teaching children, quote, how to embrace the blockchain technology. Dude, get right out of town. What even the F and F are you talking about? What the hell sort of bullshit nonsense? You're making a token to fight anti-Semitism and anti-Americanism? Okay, so the premise is deeply nonsensical in the most deeply nonsensical terms possible. I repeat myself. I just
So
did.
I still
I,
don't quite understand because I saw this stuff last night. People, and obviously the crypto people can see it. Like, it's all on chain. They can see what happened. Hey, he rug pulled $3 million or something. I can't even tell if this stuff's illegal anymore because the Hawk Tour girl did it and she went away, and then I guess she's just fine. She just like stole a bunch of money. But if you
well,
get rug pulled on this, you deserve it.
sure.
If you invest in this something like this, all you're trying to do is like catch like if you get rug
Oh
pulled,
yeah.
that's on
Listen,
you.
okay. I'm a
And he's a scumbag.
sympathetic.
How's that?
I'm a sympathetic, empathetic person with many different things. I have no sympathy for people that lost money in this. None, zero. I'm sorry. Negative sympathy. Okay. Also, this guy's a piece of shit if this is true. So Yahoo says a wallet linked to him, newly launched crypto token allegedly pocketed nearly $1 million through suspicious manipulation of a liquidity pool on Monday. The creator of the NYC token sent 80 million coins to an account that added the tokens as liquidity on a decentralized exchange. That account then removed $2.4 million, $3 million in USDC before adding back $1.5 million, leaving approximately $932,000 in unaccounted for USDC liquidity. On-chain analytics platform Bubble Maps confirmed to Decrypt on Monday. Obviously, more to come on this, but if this is true, like, what a scumbag piece of garbage.
But I can't even tell in crypto anymore what's legal and what's not legal.
So I don't know what the law is, but this is a pump and dump. This is a pump and a dump.
Immediately.
What an asshole.
All right, so let's talk real estate a little bit. So I pulled this one from the Apollo chart book that you mentioned before. And this chart is kind of a face blower. So this looks at median home prices by county. Okay? And it segments them into 3 different price points. Less than $250 for median house price, $250 to $350, and over $350,000. So in the West, the Northeast, and the Southeast, most of the median home prices are over $350,000. Obviously, basically 2/3 of the country, the median home price in these counties is less than $250K. How surprising is this to you? Now, obviously, you go, well, yeah, of course, no one wants to live there, or it's cheaper to live there. But looking at this, the visual of this is very. It's hard to reconcile with what's going on, and this is why I said if we just put 3 million houses out west and 3 million houses on the east side, obviously I'm overgeneralizing. Would that not just fix the housing solution?
I don't know. That's a big question.
But are you surprised that there are so many areas with relatively cheap housing on here?
No. And this is just a great visual. This is the chart that you show people when people are yelling at each other about housing.
Right.
It's like we're talking past each other. My housing situation and your housing situation and that person's housing situation have nothing to do with one another. The only thing that we share in common is mortgage rates. And even that we don't necessarily have in common because people with money have access to better rates, but it is just such a fractured market.
This map is an advertisement for remote work. Move to Arkansas or Iowa, somewhere in the middle of the country, cheaper housing. Okay. You asked me a couple weeks ago, how is the Grand Rapids housing market doing in your area? And I get an email from like my mortgage broker through the bank like once a week, an update. Hey, Ben. And I always kind of forget about it. But this one said, hey, Grand Rapids housing market update. So I looked at it, and we're one of these places, obviously. Median sale price, $345,000, up about 5% from last year. Total homes sold in Grand Rapids, 887, which is down 15%. Median days on market is 19. And the supply of inventory is 1.9 months. So there's no supply. So I think the average right now nationwide is like 4 months or something.
Median days on market is wild.
19 days. Isn't that nuts? No change from last year. So that obviously the housing market here is still pretty strong to quite strong. Like
the housing market in my neighborhood is very soft. Like there's even a couple of decent homes. They're just not selling.
These numbers surprise me how quick things are still going. It's pretty nuts.
Okay. This is a little bit of green shoots, a little bit of good news. Housing affordability index still as low as it's been. If this is a stock chart, and I know it's not, I'd buy the snot out of this. It looks like it's bottoming. And then if you turn it over, you look at the average. This is objectively good news. Average monthly mortgage payment on a new 30-year mortgage is rolling over.
Because rates are coming down?
Yeah.
And housing prices have more or less stagnated. I think housing prices might end the year up like 1% or something. for 2025. It takes a while for them to totally update. Remember a few years ago when we kind of thought the conventional wisdom was just buy a house now and refinance in a few years. It'll be fine. And you still haven't been able to? How are those people feeling? Because they probably got a little bit of equity from housing prices rising a tad, but that has
Well,
to be a
this is such a
pain
good
trade,
point. When we
right?
say, how are those people? Which people? Which houses? Where do they live? What does their job look like? What does their family situation look like? Right? You can't just bucket how
All
to,
right, you're
right?
doing that way too much today.
No, I'm not. No,
You're
I'm
doing way
not.
too micro. I'm doing macro.
No, you can't say how
Let's
do
call up
people.
Larry down the street and see how he's
No,
feeling. You
dude.
can't do that.
How do people who bought a house in 2022 felt? I mean, you can't. I'm sorry. That's not
How
a
does the
bucket of.
median person feel? Probably not great because they thought
Can't
they were
do
going to
it.
refinance.
Or
You
can't
can do it.
You
You
can't
can.
median. You can't median that. I'm just sorry. You can't. I'm a stickler, I guess.
Doing
But you
way
can't
too much
median that.
nitpicking today.
Sorry.
All right,
Okay.
so-
What I didn't read Nick's post today is home equity fake wealth.
Okay, I've got strong thoughts about this. So he did a post about is home equity fake because people say you can't do anything with it, and Nick was saying like his whole take was, listen, you can rent, okay, and he's saying like where he lives in Jersey City, which is where right across the water or what?
Mm-hmm.
Okay, he's saying like, listen, it's so much cheaper for me to rent. If I bought $1 million home and I paid the mortgage and I paid the insurance, the property taxes, I'd be paying double my monthly payment as I am to rent. So he's saying like if you want to sell and rent, like that's how you lock in gains. But I think this whole idea that home equity is fake wealth is such a dumb idea. The people say, look, well, you can't do anything with it. You can't touch it. So it's not real wealth.
Did Nick say that it's fake wealth?
No. Nick is saying that's what a lot of people are saying. He kind of said, like, here's what you can do about it.
How is that fake wealth? It's an asset.
A lot of people are saying, well, you can't really do anything with it because you have to borrow against your home or you have to downsize or whatever. And I think that this is just, I think a lot of people assume that spending is wealth. And guess what? The lack of spending, that's the wealth. Okay?
Right.
Just because you can't spend your house doesn't mean you're not building an asset and it's building wealth. Here's what you can do with it. You can use it to trade up to a new home because it'll make a new home way cheaper because you use your equity as the down payment. You don't have to save for a down payment because you have equity in your home. That's a huge asset. Borrowing against it. If you have a big project coming due, so you don't have to sell your investments in the stock market or get out of high yield bonds or cash or whatever, like you can use a home equity line as a bridge loan. Like there are so many things you can do with home equity. It's a huge asset.
Yeah, that's crazy town.
Calling it fake wealth. And it's also the fact that you can't get out of it quickly is one of the reasons it is an asset. Like it's long-term wealth.
Amen.
All right. It's not fake wealth. All right.
All right, let's do private markets for a minute. I did a conversation on Talking Wealth, which is a podcast that we do for advisors on GP stakes with Todd Owens from Cantilever, which was an awesome conversation. What are GP stakes? GP stakes are investment pools. They take minority investments in alternative asset managers. It's a great business, all else equal. You are buying a piece of a business. You're being the GP. In other words,
you're buying the fees.
Instead of paying 220, you're buying a piece of the revenue stream. You can model the hell out of it. These are illiquid investments. You have an upside call option if there's performance fees. Like this is a very attractive area of alternative markets.
Guess what? The GPs usually beat the LPs.
Yeah.
Almost always.
Yeah.
Right?
Okay. There was an article in the Times towards the end of 2025. Investors warn of rot in private equity as funds strike circular deals. So you and I think we're fairly early in identifying this private equity thing. I'm seeing a lot of activity in my inbox. What is happening? It's secondaries to the new private credit. There is so much money. There's so many emails of secondary funds that are taking investors out of their original investments. Now, there is nuance here. It's not all bad. It's certainly not all good. I would say that this is definitely something that has my attention. I am looking skeptically. I am looking sideways at these deals. Why is this happening so frequently? How much money is stuck? So we will be talking about this a lot.
What kind of discounts are these sales happening? So
Right.
when I was back in my endowment days, we owned a couple secondary funds and they would buy them for like 40 to 50 cents on the dollar. It was a huge discount because there weren't that many that happened. private equity was so much smaller back then.
I'm sure, and
talking
I'm
like
sure those,
2008,
I'm
2009.
sure those secondary funds did phenomenally well, generally speaking.
Because you immediately write it up back up to
Right.
$1, right? You buy
Right.
it for 50 cents, you write it up to $1, you have an IRR already just based on the NAV, right? Yes, but
By the way, that behavior is obviously bullshit. But you buy something for 50 cents, market to $1, take fees on $1. If you're able to buy something for 50 cents, I'm sorry, it's not worth $1. Don't bullshit a bullshitter.
Yeah, I'd be curious to hear what the discounts are these days. I don't know.
All right, junk bond investor shared a chart. I believe this is from, I've seen this chart. This is from HPS. It's, I think, direct lending spreads versus broadly syndicated loan spreads. So it's basically apples, trying to make an apples to apples comparison in terms of the credit quality of the underlying borrower.
Okay.
Private versus public. Okay. So at Junk Bond Invest wrote 200 basis points excess spread versus syndicated loans. Here's what that 200 basis points is paying you for. Can't sell it. Can't price it. Borrower can stop paying cash and switch to payment in kind, and you market yourself. Okay.
So that's the risk premium, right?
Yeah, there it is. Fair summary. So then obviously it's up to the investor. Okay.
Obviously, the person with the junk bond investor handle is probably a little,
yes,
has some skin in the game there in terms of.
Yes. Probably doesn't think that the 200 basis points spread is worth it.
Right.
Okay. So Silicon Valley Bank, remember them?
Mm-hmm.
Did a post on state of the markets. And venture-backed companies have been in a deep, brutal bear market, like an epic bear market for the better part of 3 years. I don't want to say nobody talks about it. That's absurd. I don't think we speak about it a ton on this show because it's outside of our purview. It's outside of the public light for the most part. But a lot of the mega growth funds that came in 2021 and wrecked the markets and wrecked valuations and just turned the market upside down. Like this market has been completely frozen and it's starting to heal in a good way, like genuinely in a good way. So
yeah, the pendulum swung really wide in both directions on these things.
So they have a couple of charts that I wanted to highlight. One is the speed from a Series A, from a C to Series A, Series A to Series B, B to C, was happening so fast. Like think
about how spoiled those founders got, and like probably assuming this is just the way it is.
Yeah, found you have 24 hours.
Right. You want to give me your money?
Control.
I don't care. I got someone else on the street who'll give it to me anyway.
So here's a great chart. The companies, so they're looking at the average revenue growth, the average revenue and growth for US VC-backed tech IPOs. And the takeaway is companies are bigger, but they're slower. So it shows how much revenue on average from 2010 to 2013, 14 to 19, 20 to 21, 22 to 25. And it's up and to the right. So these companies are much bigger when they IPO, like significantly so in terms of revenue and market cap. And the average annual revenue has slowed pretty dramatically, like pretty dramatically. 9%, not great. Not great. And then they have a great chart showing the underwriting fees and ongoing compliance costs. The underwriting fees as a percent of float for larger companies, obviously it's smaller, right? With scale, but like if you're raising $250 to $500 million, it's 6%. And the annual costs, the annual costs are not nothing. 50 basis points, give or take, a little bit more. It's expensive. Going public is very expensive.
Isn't it crazy Silicon Valley Bank still exists? I'm just looking at these reports.
Yeah. How
is that still a thing?
Well, who bought them? Citizens Bank. Yeah. All right. We had two, so it's earnings season. I love it. Very excited. We get to hear from the companies. You know, I'm all about that. Jamie Dimon this morning. Let's see what he said. The U.S. economy, this is from the transcript, has remained resilient. While labor markets have softened, conditions do not appear to be worsening. Meanwhile, consumers continue to spend and businesses generally remain healthy. These conditions could persist for some time. This is basically Jamie Dimon saying, holy shit, things are amazing.
You
He's
sent
like,
me and Josh this
things are,
morning said this is a top.
yeah, I mean, obviously I was
He
kidding,
hasn't
but
sounded this positive in years.
yeah, he's like, fine, things are awesome. I
Yeah.
can't even lie.
I guess he can't shake it anymore. Maybe this
Here's
is
an,
where things finally turn down.
all right, Delta. This is pretty remarkable. So record revenue, record performance for the fourth quarter, record year in 2025, even with a dramatic slowdown in foreign travel. I haven't seen the numbers yet, but pretty incredible. The consumer. All right, so they say 2026 is off to a strong start with top line growth accelerating on consumer and corporate demand. For the full year, we expect to deliver margin expansion and earnings growth of 20% year over year. How about that?
So Delta's breaking out again. You see this chart?
Those are big boy numbers. 20% margin expansion and earnings growth. Yeah, I see Delta.
What were these? So these stocks were down, what, 6, 70, 80% in the pandemic?
I would guess 80%. Now, Delta
Unreal.
has separated itself from the competition.
Why is Delta so much better than every other airline? Like, it's not even close anymore.
Yeah, so it is so much better than every other airline, and why is it? I can't tell you. Like, why are they out executing everybody else? Don't know.
The planes are better. The seats are more comfortable. They have screens.
It's great. It's fantastic. It's great.
Right.
All right. All right. Let's talk the box office. 2025 was only 350 million below the previous year. For a kind of underwhelming year, that's not so bad.
Really? I thought people said this was like a banner year for movies.
No, it wasn't.
We had Avatar, we had Zootopia, we had
Minecraft.
You don't think so? Sinners and One Battle After Another. Like, there was a lot of movies people talked about.
It wasn't. I'm telling you, it was down $350 million from the previous year.
This is a secular decline. I'm totally selling your theory that 2026 will be higher. Every year is going to be lower from now on. This is it, man. It's over.
2026 will be higher than 2025.
No way. Sorry, man. It's done. Movies are done. I don't think you've realized this yet. They're done. Unless they double the ticket prices, movies, like, as a thing, it's slow it's not cyclical, it's secular.
I have more experience than you do on this topic.
You're blinded. You have blinders on because you go to the movie all the time.
How do I dude, the opposite. You have no idea because you have never been to the movies. I go frequently. So
look at the numbers. People would rather watch a movie at home than go to the theater. It's true. It's easier.
Well, of course that's true. Of course that's true. And that is already reflected in the revenue. That's not going to happen in 2026. That's been happening. Right? 2026 is not the year that people decide to watch movies at home. That's been happening for the last decade.
It's just slowly but surely eating away. So it's going to continue to get worse.
So, okay, I'm on the other side of that. I took Robin to see The Housemaid. So Robin and I haven't been to a movie together since what's it called? A Star is Born. What year was that? 2018?
I've never heard of The Housemaid. It sounds like a Jennifer Lopez rom-com.
Okay, with all respect, you can't say I've never heard of The Housemaid and have an opinion on the movies. The Housemaid.
Another Sydney Sweeney comes out with a new movie once a month, and no one cares.
How wrong you are, Ben. So we went to the movie theater, and we did movie and a dinner. So I said, you know what? Let's go see the 4:00 show. Nobody's going to be there. We'll do dinner at 7. We'll have a fun little night. And she read the book, so she was like, fine. She was actually excited to see this movie. Dude, the theater was packed. I couldn't believe it. I thought a 4:00 showing was going to be empty. There was at least 100 people in the theater. I was genuinely shocked. I thought it was going to be empty. Housemaid box office mojo.
It's got a 7 out of 10 on IMDb. That's not bad.
So
did you like the movie?
It's done $100 million at the domestic box office.
Okay, that's not bad.
That ain't nothing. It's done 150 global. All right, so the movie, I had a great time. I had a good time. It was fun. It was a terrible movie. Terrible might be a stretch, but like, it wasn't.
The rating was actually pretty good.
I can't believe the critics gave it a 72%. The audience loved it. It was fun. I was fully entertained. Money well spent. Anyway, yeah. Listen, I'm not an idiot in the box office. I understand numbers have been down every single year. I'm just saying I think 2026 is the year that it comes out. One of the reasons why it was as bad as it was is because some of the movies that were supposed to come out in 2025 didn't. The Michael Jackson movie, for example, is probably going to do decent. That was punted to 2026.
No, any of those biographies about musicians now, they're dead money. No one cares.
I think the Michael Jackson one is going to make money.
All right. If you're hanging your hat on Michael Jackson biopic for 2026, I'm going to be the winner here on this bet. We'll check back in a year. All right.
Hold on. Last thing on streaming. So this will kill the theater. Netflix, somebody tweeted that Netflix is reportedly interested in giving a 17-day theatrical window for Warner Brothers films once they acquired the studio. That will be the end. Like that will be horrifically bad for Hollywood.
The writing's on the wall, my friend. All right, this is the blog post I've been waiting for. Why are TVs so cheap? Construction Physics, pretty good Substack I've looked at a few times. They do a detailed breakdown of LED stuff. And a lot of it I didn't understand, but it shows the cost of price per area pixel has fallen 90% since 2000. Okay, so this is not just all the streamers coming in, okay? It says, since 2000, the story of TVs falling in price is largely the story of liquid crystal display TVs going from niche, expensive technology to mass-produced and inexpensive one. It's basically Moore's Law. It says they followed a similar path of semiconductor manufacturing, and this blog post is actually worth reading. But it says, an important driver of cost reduction has been manufacturers using larger and larger silicon wafers over time. In fact, sheets of mother glass have grown in size much faster than silicon wafers for semiconductor manufacturing. It's showing that the technology has gotten cheaper and easier to make. So it's not just everyone said no, Ben. It's just the streamers. They're subsidizing. It's not that. But my thinking was, well, why? It has to be a cost thing. So that's what it is. The technology has gotten cheaper to make, and that's why TVs are cheaper. Great blog post. Check it out. It's
mother glass. I never heard the term before.
I did. It's basically just. It sounds like it's just a Moore's Law kind of thing where this technology has been easier to make. Good stuff.
Ben, I haven't stepped on a scale in a while. I'm afraid to see what the numbers would show back at me. Okay. I've been eating not terrible. I mean, I've been better recently, but like the fourth quarter was bad. I was just threw caution to the wind. Whatever. Yeah, I'll eat it. Who cares? I haven't started my diet yet, but I'm mentally gearing up for it. And I asked Robin if the scale was broken because I was only 176 pounds, but you know what? This is a case of the scale lying. I don't look good. Like I'm flabby. My belly looks terrible. I'm fat, but I'm fat but light. That's not really where you want to be.
Are you looking for a pep talk here? What are you looking for?
No, I'm merely sharing.
All right, call your trainer again.
I can't. It's been too long. I'm embarrassed.
You can't do it in your house. You have to go to get a trainer at a gym. Okay.
I can't go to the gym. I don't have time for that.
You can make it happen. You get up early. All right. This is a sign of progress from flowing data. Number of restaurants by cuisine type since 2018. Pizzas are in a huge decline. Mexican's up, coffee and bakery's way up, American is up. But I see this as a sign of progress. Every city you go to now has way better restaurants. They're more niche. There's breweries. There's all these different things. And in the past, everyone just had a pizza place to go to. And this is a sign of progress in America.
It's true.
That pizzas are... When we were younger, we'd go out with my dad's family in Ludington, Michigan. Where would we go? Pizza Hut. That was our place to go out for dinner with family. Aunts, uncles, cousins, everyone get together. Yeah, let's go to Pizza Hut. The red cups, the lunch buffet.
You know, I mentioned earlier one of my bad qualities. One of my good qualities. I love cities. I love everywhere I go. I'm not one of these people who's like, oh yeah, shithole.
I think that too.
Every city I go to, I'm like, I like it here. It's nice.
People who argue about my city's better than yours, like there's so many different places I feel like I could live if I had to. Like we were in Arizona, I'm like, I could live here. You and I went to like Arkansas. We went to Oklahoma. Like I could live there. Like
I love our cities.
Everywhere has nice stores and restaurants now. People have these places have all figured it out.
Yeah.
Let's do some recommendations.
Nice little country we got. All right. So I mentioned Begonia last week, but I didn't. I think I glossed over as I was giving 12 recommendations or 12 reviews. Mm-hmm. Jesse Plemons, my God. Now Emma Stone was good, but he is. First of all, Ozempic, I'm guessing.
No.
He
He
is.
gained a bunch of weight for a role. I mean, maybe he used it to lose it, but
Oh,
it's hard for me to believe you. I don't think you ever watched Friday Night Lights, which is in the top
mm-mm.
5 of my best favorite shows of all time.
Was it a good movie too?
I like the show better than the movie. The movie was good, but you would never watch the show and say this guy is going to be the star that's going to come out of the show. He was pretty good, but there was so many people who were such better actors and characters in the show. You would never said this guy's going to have a great movie career. Never. It's really hard
When
to
we
believe.
when when Rob and I walked out of the theater after Housemate, I said to her, first thing I said was, "I was dumber than Begonia." Um, all right. Another thing that we glossed over. So, like the Cameron Crowe book, what was it called?
The Uncool. That's the best audiobook I've ever listened to. It was so good.
So the story of how he did what he did, like, still doesn't really make sense. Like, it can never happen today about being like a kid writer for rock and roll. So, like, one of the stories that he told was like when Leonard Skinner opened for the Who. Like, could
Right.
you imagine being at that concert? I mean,
The
him
if
interviewing the Allman Brothers.
So if you're a fan of Almost Famous, you have to listen to this because it's like an extended version of Almost Famous. I think the book is better than the movie. I love that movie. It's one of my favorite movies this century. The book it like adds an element of mystique, and you're right. The stories he has about interviewing Chris Christopherson and the Allman Brothers
Yeah,
and David Bowie
and Zeppelin.
he became friends with all these people at a time when the internet and social media didn't exist, and these were like
Unreal.
these were like the coolest people alive back then. And oh man, it's so good.
And so then also after that, after he was done with that, he wrote Fast Times at Ridgemont High, Sean Penn's first role, and Sean Penn happened to be wearing Vans, and that put Vans on the map.
Right. That was
And then also, basically, that he invented the teenage movie.
yes, he went undercover in a high school to write Fast Times at Ridgemont High. It was actually based on a real high school.
And then he
It's
did Jerry Maguire. And
yeah,
I mean,
that's the best audiobook I've ever heard. Him telling the stories himself and like using inflections and accents for voices, and it's so good.
all right. The other book that I just finished, and this was a thick book. Can I say this was a thick listen?
How about you can say it was a long book? A long listen?
So James Andrew Miller, he wrote the book about ESPN. These guys have all the fun. I didn't read that book, but I asked you.
I love that book.
Is this book in the same format? So I just thought that this was, a book, and it was technically a book, but it was all interviews. Like
I like books in that format. Yeah.
the entire book was interviews, and the book, what is it even called? Hold on. CIA James Andrew Miller. So the book was called Powerhouse: The Untold Story of Hollywood's Creative Artists Agency. So it was a story of Mike Ovitz and his partners who created CIA. He was the most powerful man in Hollywood, and what a personality! What an unbelievable personality. I don't know what else to say. But this was like the book. This was the story of Hollywood through interviews, and it was everybody from Barbra Streisand to Magic Johnson, all of the partners and everybody involved. Sarah Jessica Parker, Matthew Broderick, like Stallone, De Niro, Scorsese. Everybody was interviewed for this story, and it was unbelievable. Like,
Okay.
cannot
I love Hollywood stories. I mean,
cannot possibly recommend this highly enough. The personalities, the business, just unbelievable. So 2 what ifs from that book that came out. Stallone got the script for Beverly Hills Cop, and he hated it, and he wanted to make changes to it. He wanted to rewrite it, and they're like, "All right, dude, this is just not
that's
for
a
you."
way worse movie with Sly Stallone.
Of course, but what a crazy what if.
Can you imagine Sly Stallone in that Detroit Lions jacket like Murphy?
No, it's not doesn't
No.
work. Here's another one that totally doesn't work. This just sounds so weird. John Lovitz, his name's John, right? John Lovitz?
Yeah, John Lovitz.
John Lovitz and Dana Carvey, they wrote Bad Boys for them.
That's kind of funny.
Like,
Yeah.
what?
Yeah, that's a different movie. That's a very forgettable.
I mentioned this to you, like the story about Farley in his last days, and just unbelievable. This is a listen. I'm going to say, if you ever wanted to like listen to a book and just see what it was about, you're not reading this book. It's absurd. I don't know how many pages it was, but it's a 15-hour book.
This Audible section is just you and I giving each other recommendations now.
Pretty much. Nobody else is listening. All right. Last thing. Oh, Industry is back. I freaking love that show. You watch Industry, or did you fall off?
I fell off. It just
Okay.
it
It's
got
too
too
much?
much. It was a little too over the top for me.
Okay,
Like
it is highly over the top.
I
Um,
liked it. The over the top stuff. It's I feel like just if they just calm down a little bit, I can't handle it too
okay,
much.
the over the top stuff is gratuitous, but hey, I'm a sick puppy. I like it. Uh, is Landman the best, worst show on TV?
Okay, I had a Landman. I talked about it. It's if it didn't have Billy Bob Thornton in it, it would be unwatchable because it feels like everyone is in their own TV show. The mom and the daughter are in a different TV show, like they're in a sitcom.
Yeah.
The son and his girlfriend who had the guy die
Right,
and they got a baby,
right.
like that's a totally different show. If it didn't have Billy Bob as the glue holding it all together, he's so good. And
Because this season sucks. I mean, I'm not enjoying it any less, but objectively, nothing is happening. It should be boring, and yet, Ben, every time the credits come up, I'm like, shit, that was 50 minutes.
yeah, it's just Billy and Sam Elliott too. But the Demi Moore plastic surgery totally takes me out of every scene. It's hard. Anyway, my sister sent me this thing. Billy Bob lost his brother at an early age, and he talked about grief and how he channels it in his acting. And he said, if I ever seem like sad or melancholy, it's because I am. He's like, but he's like, I use that to like remember my brother, but I also use it in my acting. He's like a really thoughtful guy. I really like him. Okay, I have my best picture of the year nomination. This is Ben Carlson only
For 2025?
for 2025. Sentimental
Tra-
value.
Train Dreams.
No, Train Dreams it got displaced. That's number 2.
Okay.
Okay. As we know, the Leo movie, bottom of the list. Sentimental value. So this is the same people who made The Worst Person in the World. This is a Norwegian filmmaker. Okay. They made this movie and it's the same writers, same directors. They use the same star, this person.
You
But
like
also,
Worst Person in the World?
I really like that movie. That's kind of movie
Really?
that stuck with me. Oh, I really liked it.
Oh, I feel like that's not a you movie. Okay. So
you
Sentimental
watched
Value.
that one. So this is the same girl actress as the lead. Stellan Skarsgård, who you've seen in a million things,
Yeah, of
is in
course.
it, and then Elle Fanning is also in it. And
Is this nominated, or this is a personal Ben Carlson nomination?
it should be. I would imagine it's nominated. I can't believe it wouldn't. I got really good critic reviews, but it's very good. And here's the thing. So half of it's in English, half of it is in Norwegian, or I don't know what. And it's so most of it's subtitles. And I used to hate subtitles, but
I
now
love subtitles.
it makes you lock into the movie. I can't be
Yeah.
on my phone. It makes you watch it. And it's just it's a story about a daughter and a dad. And the dad he divorced the mom and kind of wasn't in the girls' lives. And it's them working through the relationship. And it just feels real. It's really well done. And the funny thing is, even with a different language most of the time, I can still tell that this actress is so good at what she does, even though I can't, understand everything she does except through subtitles. It's very good. That's the Ben Carlson Film of the Year, Best Picture.
Wow. Okay. This is a dumb question. I assume that should
You
I
won't
watch
like it. You won't
Okay.
like it.
So I won't like it. I shouldn't watch it.
Did you like Worst Person in the World?
If I'm thinking of the movie, yeah, I like that movie. I mean, I didn't love
Okay,
it.
if you
I think I
like
saw
that movie, give this a try. I think this is better than that. I like this more,
Wait a minute.
but it's called
I did-
Sentimental Value.
I did not see this movie. Nope.
Okay.
I was thinking of something else.
Okay, I wouldn't imagine you've seen it. I really like that one. I think this one's better.
All right. I'm out.
Yeah,
Thank
no,
you.
not a Michael movie.
Okay.
All right. Anything else?
What a crazy week, huh?
It was.
And yet the market seems to
We hit a new
shrug it
all-time high
off.
yesterday. The stock market is invincible.
Oh boy.
Sure seems like it. Yeah, and then we're gonna get a bear market this year
Market
anyway.
will never go down ever.
All right, how about this? The stock market will go down. It will always come back. Heard it here first, folks.
Guaranteed. Every
Animal
single
Spirits
time.
at thecompoundnews.com. Check out Talking Wealth. Our other people say, hey, you guys don't plug it enough. Talking Wealth. Subscribe to the newsletter if you're an advisor. Watch the shows. It's good stuff. See you next week.